Good day, Grade 12 learners, and welcome to today's accounting lesson. My name is Mr. Simbi, and this lesson is brought to you by the Gauteng Department of Education in collaboration with the Sabono Discovery Center. We are going to be having these lessons, so it is important that you tell your friends that lessons are going to be starting, and then we need to have all the resources that we can use. Make sure you bring a calculator, you bring a pen, so that you can be able to write as well. In today's class, we're going to be focusing on the concept that relate to the statement of comprehensive income. In the previous week, we dealt with companies' concepts and ledger accounts. And then in today's class, we're going to be looking at the concepts on statement of comprehensive income, as well as the preparation of the statement of comprehensive income. So if you know that you have a challenge with adjustments, today's class is for you, all right? But what is very important is that you follow today's class. Make sure you are writing. Make sure you have your calculator, as I've said, and make sure you have your pencil so that you can be taking notes of what we will be doing. So to begin with, let's bring in some concepts that relate to the statement of comprehensive income. All right. So the statement of comprehensive income reflects the trading results in the form of profit or loss for a specific accounting period, which is usually a year. So when a business operates, one of the main aims is to generate a profit. And when a business generates the profit, it will need to show this profit. And the statement of comprehensive income therefore helps businesses to show how we have generated the profits. At year end, all income and expenses accounts will be checked to ensure that all figures represent the amounts for the current year. This is very important, that at the end of the year, we need to compare our income and expenses that were incurred in order for us to generate that particular income. And then when we do that, we then are able to calculate either our profits or our losses for that particular financial year. Adjustments will be done to rectify any accruals or prepayments. It is very important that you know how to do adjustments. I know most of you would say, I have a problem with adjustments. In these sessions, we're going to help you to make adjustments easy for you. And we're going to be looking at accruals or prepayments. If you're not sure what are accruals or what are prepayments, make sure you follow today's class, because we're going to break down all these accruals and the prepayments and how they must be recorded. Okay? And then the net income or net loss is obtained by subtracting expenses from the income. So it is very important that you know your income as well as your expenses so that you end up getting your income at the end of the year. The format of the statement of comprehensive income is of great importance, because when you know what to place where, it becomes easy for you when you prepare the statement of comprehensive income. And now we're coming from grade 11. In grade 11, we did the statement of comprehensive income as well, but we were doing it for what was known as the partnerships. You remember we did that in grade 11, the previous year. In this year, the format will remain almost the same. I'm going to show you in today's class what are the changes that would have occurred from the statement of comprehensive income that we did in partnership to the statement of comprehensive income that we need for our grade 12. So to begin with, I've broken down the statement of comprehensive income into about 3 parts. The first part is what I'll call my trading section. In my trading section, this is where I record my sales, and this is one of the most important aspects, your debtors allowances. You need not to forget to record these ones. So I will record my sales, and then I subtract my debtors allowances. Then here I have 100,000. Remember, we're just doing format right now. We're just doing format. And then I will subtract my cost of sales. So cost of sales is subtracted. Hence you see here, I put it in brackets. That would then give me what we call gross profit. Of course, you remember this. We did this in grade 10 as well as in grade 11. This should not be a problem for you at all. The second part of my statement of comprehensive income is what I call the operating section. So this is where I begin to show the operations that happen in the business and other certain things. In here, I will have my discount received, my rent income. You have your profit on sale of asset. So remember here, I'm recording my other income. What other income have we received in this financial year? We also have what is known as bad debts recovered. I will explain it in today's class. What are bad debts recovered? Provision for bad debts adjustment. This is a very interesting adjustment. And if you know you need help with this adjustment, please follow today's class. And then we have several other ones that will be considered. And then we end up with our operating profit. After that, we then come to what we call operating expenses. Operating expenses. This is where we have several expenses that a business will incur when it is in operation. We're going to take a quick 1-minute break. Please stay tuned. I'm going to see you in exactly 1 minute.
Excellence. Excellence is a habit. Excellence is a quality you have, a quality I have. It's a quality we have when we honor what is true to us. Yes, we are gifted differently. uNkulunkulu akasinikanga ngokufana. Excellence is striving for your best. Whenever you have a particular project, test, homework, uzibuze, ask yourself, is this my best? Can I put in more effort? Excellence is striving to be in the top 1% of the area in which you are gifted. And so I challenge you, in every single thing that you do, in every single area that you're gifted in, whether it's sports, it's academic, ucula, whatever that gift is, strive for excellence.
Welcome back. We just took a 1-minute break and then I'm going to continue from where I had left off from. Remember, we're talking about operating expenses, and we have most of the expenses that we've seen in our grade 11 year. But I have a few new expenses, which is your audit fees. You're wondering, what is audit fees? These are fees that are paid to our auditors, our external auditors. And we also have what is known as directors' fees. Remember, we have people that are appointed by shareholders to do the day-to-day running of the business. And these are called directors. And their fees must be shown separately as directors' fees. So these are the new concepts or the new items that you will find in the statement of comprehensive income for this year. I'm going to show you one more, which is new as well. All right. Now, remember when we did the sole trader, that was in grade 10, all right? And then we did this part of the sole trader, whereby after we have the operating profit, we just add interest income. And then after the interest income, we then get the profit before interest expense, which we subtract. Then we get net profit or loss for the year. Then we were done. We were done when we get to this point. That was in grade 10. But now that we're in grade 12, remember, we are dealing with companies. We're dealing with companies, and need I remind you that the owners of the company are called what? Shareholders. Now that we are in grade 12, we will come again where we have our operating profit, and then we add interest income. Very important that interest income is added. So we add interest income. Then we get our profit before interest expense. Then we will subtract interest expense. Now, it will not end here as it was with the sole trader. We still have a bit more to go. We will now have what we call profit before tax. All right? Because if you follow in last week's class, we spoke about the company being a legal entity, which therefore means it is subject to paying tax according to the tax bracket that would have been issued by the Minister of Finance. So at times you find that in your question paper, your tax may be 28% or 30%. In this case, our taxation is at 28%. So after we have the profit before tax, we will then subtract our income tax, and then you get 28% of that figure, then you end up with that amount. And then we now have what we call net profit after tax. So this year, our statement of comprehensive income, it will assume the same structure, but we're going to add certain aspects onto it, such as audit fees. Another one, director's fees. What is the next one? Income tax. So once you know these aspects and you know where to place them, it becomes easy for you when you prepare your statement of comprehensive income. All right, let's continue. All right, we are going to do an activity now. We're going to begin with activity number 1. Activity number 1. So for this activity to make sense to you, make sure you are writing, okay? Because I'm going to do certain adjustments with you for you to be able to understand. Make sure you have a pen, you have a pencil, you have a calculator. Very important. How can you do accounting without a calculator? And you somewhere to write, okay? Then let's begin to do the first activity, which is activity number 1. Let's go. This is for Egu Limited. Required. Complete the statement of comprehensive income for the year ended 28 February 2023. The company has an authorized share capital of 1 million ordinary shares. Okay, so this part is just there to tell us that we have this authorized share capital. However, it will not have an impact on our statement of comprehensive income, because remember, in our statement of comprehensive income, we need to record our income and then our expenses. All right, let's look. We are given a pre-adjustment trial balance. Okay, so this is a list of balances that we are given as at 28 February 2023. All right, you know what is going to come next? Adjustments. And then we have about 10 adjustments that we're going to do today. All right, so here are the adjustments. And for them to make sense to you, I'm going to break them one by one and I explain. Once you understand, you tell me, Mr. Simbi, I've understood. Then I'm going to move on to the next adjustment. Are we okay? Okay, let's do that then. So we're going to begin with the first adjustment. There it goes. Adjustment number 1. So I'm going to give you time so that you can see the information and understand it, so that when I do the adjustment, it also makes sense to you. It says, we are given a pre-adjustment trial balance as of 28 February 2023. You can see here we have our sales, but we are not given our cost of sales. And then we're given what is known as debtors allowances. Adjustments. The business used a fixed markup of 60%. You know what is markup? Markup, it is that profit that the business will make in selling the goods to customers. All right, so the business will use a fixed markup of 60% on cost. This was achieved over the financial year. And on 28 February 2023, credit sales of 9.6 were not recorded. All right, so here we have 2 adjustments that we want to do. I'm going to show you how to do these adjustments. Let's now see if we're given the answer book. There is our answer book. Remember, we are always given the answer book in accounting. And whenever you are writing, you need to understand your answer book so that you'll be able to fill in the information. All right, so we know the first thing we have to write here is our sales. We're going to record our sales. So I'm going to come here. I hope you're writing with me. Okay, let's begin. So I start off with my sales, and I'm going to come here and say sales. Then I open my bracket because I am given here 1,770,400. So I'm going to take that, okay, and I bring it here, 1,770,400. I know that before I do anything, I need to record my debtors allowances. Debtors allowances. So the first thing I'm going to do, I'm going to come and say minus how much? 6,000 for the debtors allowances. Okay, so we have subtracted our debtors allowances in this case. All right, let's go on to the next aspect. On the next aspect, I am going to wait with adjustment number 1. I know I'm going to use it. When I'm told you that the business uses a fixed markup of 60%, what I understand is after sales, I'm going to have what is known as cost of sales. So here I'm going to get cost of sales. After my cost of sales, I will get what is known as my gross profit. There you see, gross profit. What I know is, if I am making a markup of 60%, when I have bought the goods, they will be on cost. And my cost is therefore 100%. This is my cost, 100%. And then my profit, that's the markup. So here I'll get my 60% markup. You still following me? So that means we can get sales here. What percentage is sales going to be? Definitely 160%. 160%. This is very, very important when you do your statement of comprehensive income. So I have now dealt with this part here. Okay, let's now come. We are told that on 28 February 2023, credit sales, okay, of 9,600 were not recorded. So we have sold goods to a debtor, and these goods have not been recorded. You understand that when we sell goods, it affects how many accounts? 4 accounts. All right. So I'm going to come here and I'm going to have my diskette. I call it my diskette. All right. Debtors, control, sales, cost of sales, and trading stock. Whenever we sell goods, it affects how many accounts? 4 accounts. And then you have to know how to record in these accounts. On your debtors, it's going to be a plus. On your sales, it's going to be a plus. On your cost of sales, it is also going to be a plus. On your trading stock, it's a minus. Okay, I'm going to say that again. Whenever you sell goods and it is not recorded, you consider your diskette. Debtors, control, sales, cost of sales, and trading stock. And then the signs will be plus, 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 minus. All right. And then we know that these goods were sold for how much? 9,600. So here we're going to get our 9,600 here. Still with me? So it simply means then, I'm going to come back to this one later. It simply means when I come here, I need to record that I have sold goods. So I'm going to come here and I'm going to say plus 9,600 for the goods that we sold but had not yet recorded. Have your calculators closed? I need you to punch these figures for me. 1,770,400 minus your 6,000 plus the 9,600. How much do we get? All right, so we end up with 1,774,000. 1,774,000. And then we now need to calculate what is known as cost of sales. So you just ask yourself, what is it that you want? Remember the UK method. The UK method, it simply means you put what you want on top over what you have times what you have to give you what you want. What is it that we want? We want 100%. So I'll come here, then I'll say, I want 100%. What do I have? I have 160%. 160%. And that 160 is equal to the 1,774,000. I put that in bracket. Then I close my bracket. Then once you punch that in your calculators, I want you to tell me, how much are you getting? Thank you. You get 1,000,000, say it again, 1,108,000. 1,108,000. Is that correct? Yes, 1,108,000. So now we can get gross profit easily. How much is the gross profit? It will become 665,000. 665,000. All right, 665,000. Is that correct? I want you to punch that in your calculators again. Okay, we're saying 1,774,000. 1,774,000. Then you minus 1,108,000. 1,108,000. Okay, that is going to give you how much you get? 666,000. Okay, someone is saying